G'day everyone, and welcome back to How I Trade. Today we have fantastic trader and good friend of mine, Mike Edward. How are you, my friend?
I'm very well, thank you, Damien. How are you?
Good, thanks. And today we're going to look at flags and how we trade flags. So, my friend, take it away.
All right, let me just share my screen here. Okay, you should be able to see that pretty soon.
Gotcha.
All right, good stuff. So I'll just kind of jump into I guess some of the flag setups, whether it's a bull flag or a bear flag setup, and some of the confirmations that I look for to be able to take some of these trades. Um, Obviously, first things first, as I just want to just touch on it, before we start. Always keep one eye on Bitcoin. So at the moment, you can see everybody knows here we got Bitcoin's been coming up in this nice range at the moment. If we look on the daily, I'm always starting on the daily quickly. When we zoom out, obviously there's been quite a bit of bullish action lately, but we can see we're still within these yellow lines here in my daily support and resistance. So we're essentially still trending sideways within a larger range for Bitcoin until we break that 25K. You can see we've touched it perfectly here. So right now we're in a bit of an indecision mode. We obviously had a very nice bullish day the other day and had a nice bullish engulfing here. We've seen a little bit of a pause in the market. We're either going to go one of two ways. We're going to break 25K and continue this uptrend, or we may see a little bit of a reversal, break this minor uptrend here, come back down to test these EMAs or test this wedge. So if you look at it from a daily standpoint, right now, key point of decision for Bitcoin, depending on what Bitcoin does, this could drag the market up or down. So that's why I'm always looking at that first when I'm setting up these trades. I normally have my Bitcoin screen on the bottom here just so that I'm aware of it before I start looking at my altcoins. So I've got a couple of setups here that I'm looking at. I actually caught quite a nice 70% odd trade on 1 inch today. So what I thought I'd do is I'd start talking about that and how I entered that trade, some of the confirmations I looked for, and why I got out of that trade when I did. So you can see here, if I start on 1 inch, obviously 1 inch on the daily, if we go onto the daily and we zoom right out, like most other altcoins for the rest of this year, we've had this huge, great big drop, and we're really kind of starting to level out sideways at the bottom. We're not creating lower lows anymore. We've had this nice little bit of a recovery, and these EMAs are starting to flatten out. So we've had a nice little bull run since the start of January. Again, following what Bitcoin's been doing. So when I'm looking at flags, it's normally a combination of diagonal market structure, or I guess a diagonal trend line, combined with market structure and candlesticks. So not too dissimilar to many other trade setups that you take, but there's certain things that you're looking for here in terms of market structure and how these flags build. So what I've identified here is to me the start of a bear flag. And I'll kind of go over some of the reasons that I see that in a second. So you can see here on 1 inch, we've had a very clear uptrend, right? We started down here. We've had a new higher low created off of this double bottom here. We've started trending upwards, higher high, higher low, higher high, higher low, and we've had this really nice uptrend, that's been going since the start of January. And if we measure that uptrend, we can see here that we've done a good 62, 63%. And we haven't had any retracement yet. So if you got in down here, people are starting to take profit up here and you're making really nice money. You can start to see quite evidently here that we're going from, very strong buying volume, really strong buying volume up the top here. We've got some very bearish candlesticks, and we've now got, a huge big sell-off here. We're starting to see the market structure reverse. If I just take this out for a second, I'll show you how I draw these. So if we didn't see any of that, we can see here that as we're in this uptrend, we've got higher high, higher low. We've broken through higher low, higher high. And as we've come back down to test this key level, this is where our support line was sitting before. So we can see back here on the 9th of Feb that we actually broke through this level. This is a change in market structure. So we've gone from higher lows and higher highs. We've consolidated a little bit. We've actually created a lower high here. And this is now a lower low. So from this low to this low, we now have new market structure. So this now tells me I'm starting to watch for reversal. I'm starting to watch for the formation of a flag. I'm starting to watch for shorts instead of longs. Bearing in mind, always keeping one eye on what Bitcoin's doing as well, because Bitcoin can obviously drag this either way with a lot of the other alts. So we've identified that we've got a low. We've obviously got some wicks down here around this EMA, which has given us our kind of first level of support. If we look left, that normally lines up with some previous levels of support over here on this side. Typically, when you see a break of a key support level, if you're not in the move here, you're waiting for this flag to build. You can see here we've got a classic horseshoe pattern. So we've got a drop. I'll just draw it on here. We've got a drop. We've recovered back up to a certain level of resistance, which is the support level that we dropped through here. You can see it quite clearly. And our horseshoe pattern has essentially played out. That's a really good trade. I know a lot of people trade the horseshoe pattern. I trade the horseshoe pattern a lot. So if you were watching 1inch when this move happened 12th of Feb, so a couple of days ago, start of this week, you would have got a nice trade there, entry at rejection of this previous level of support, and you'd be taking profit. Essentially, this is your target for taking profit, previous level. You can see there as the price has come back down again, follow the wicks. So these wicks indicate there's still lots of buying pressure. We haven't created a lower low from this previous low. We've created a double bottom, which indicates that this is not ready to reverse yet or ready to go down. So that's a classic break of your uptrend, market structure change, bearish candlesticks, nice horseshoe pattern, and that would be a nice little trade in there. I didn't get that trade. I've missed that trade. And so what typically happens when I'm looking for flags, particularly bear flags, I found, is that once you've had a horseshoe pattern, if you're in that trade, you want to be out, because what will happen is it will start then forming, essentially a bigger bear flag, which, is where you have a drop. You'll get some buyer recovery up to previous levels of resistance, and you're then looking for the next drop. And I'll talk a little bit about some of these candlestick structures and how I got this trade earlier, which is about 70% I think I took earlier. So first thing I normally draw in when I see this is fibs. So fibs, you always draw from in a drop. You want to draw from your top to your bottom. So I'm drawing my fibs right from the top of this move. You can see this is where the sellers started stepping in. These are the first signs of sellers, huge big bear candles, red candles, and you're drawing that to the bottom of your initial drop there. So you can see here that this is actually quite a weak recovery, sat down here, and you're just waiting. This is the 4-hour time frame. I find to have the most success with bear and bull flags, I typically trade the 4-hour time frames, and I'm then dropping to the 1-hour time frames, potentially the 15-minute time frames for further confirmations for entries. So you can see here, this flag has started to form, or it's actually it's started to drop already. So typically when you see a bear flag, you'll have your double bottom here from your horseshoe, and you'll start seeing buyer recovery up here. The buyers are trying to push the price back up, and you're looking for these key levels of support or resistance lined up to your fib levels, and also lined up to previous levels of support and resistance. So if I remove my trade here from a second. So I've drawn that in, I've identified we've got change in market structure, we're crawling back up this way. So really what you're doing at the moment is, if you take your support and resistance line, so I normally delete everything else, and I just have one horizontal line on here where I'm marking out where I think the resistance, where the buyers are struggling to push this back through. So if I'm looking here, I know that, for example, around the 50, between the 50 and the 61.8, this is the golden pocket area. This is a very common area for bear flags and reversals and Fibonacci retracements. And you can see, if you look left here, there's a lot of tails. So there's a wick here that's come back up to this level. We've got previous levels of resistance after these previous drops in here. And if you want, sometimes I switch to a line chart, which takes out a lot of this noise. And if you look at the line chart, you can see there, right? So it couldn't get over this level. It's tried. It's literally come straight back to that level again. Another nice indication is it's also retesting this diagonal line, which is acting as a level of diagonal resistance. And so when you get 3 confirmations there, you've got a horizontal resistance level that it's reached. You've got a nice Fibonacci level that it's reached between the 50 and the 61. And you've also got a nice uptrend that it's clearly broken through, that it's coming back up to retest. There's 3 confirmations there that, that this could be an area of interest when you're looking for a reversal back down. Next, you're looking at candlesticks. So, once you've identified that, okay, cool, this is potentially a good area where we're going to short, the way I got into this trade, if I zoom in, is you can see here, this is the first tell. So we come up, buyers pushing price up, buyers pushing price up. We've got a bearish engulfing here. So this bearish engulfing is actually engulfed this green candle. And you can see here the wick on this last green candle meant there were still buyers there propping that up. This bearish engulfing is now closing out those buyers. That means there's now no buyers there anymore because there's now sellers. The body of that selling candle has come into this wick. That's your first tell. If you wanted some traders at more of an aggressive entry, that's enough confirmations for them, and you could have entered your trade something like that at the close of that candle. You could put your stop loss either above the wick of that candle, depending on the leverage that you trade on, or if you want a slightly more conservative risk, you'd put it above the next level of Fibonacci support because you're about the 50 here. That's a 2.67% stop loss. I trade 20x, so my stop loss maximum that I only ever let myself have is 1.5, which gives me a 3% maximum loss on every trade. So I would have just been able to enter that off of that candle there with that above those wicks. That being said, if I wanted a more conservative risk approach and I wanted to put that stop loss above the 61, I wouldn't have been able to enter that trade on 20x. I would have only been able to enter it on 10x because that would have given me 2.67.
Yep, and that's the leverage and percentage is a conversation for another day, and we might do another call based on that. But
yeah,
we've got. So can you show us, can you indicate with some lines exactly where you're seeing the flag, just for those that might be watching this?
Let's have a look here. So if we switch to the hourly, you normally get a lot more information on the hourly. So once you've seen this double bottom off of this horseshoe, I'm playing around and looking at something like this. Here we go. So this is your flag that I'm seeing. So I know it might seem a little bit confusing with the EMAs on the chart, but I'll show you. So essentially, my flagpole starts at the top, right? Something like this. I've then got, this is crawling back up here this way. We're reaching a level of resistance. And what you're looking for is this and probably this to roll over and come down here. And that's your classic bear flag.
Yeah.
You've got a sharp drop. You've got poor buyer recovery. You're waiting for key levels of resistance. You're waiting for Fibonacci levels. You're waiting for candlestick structure. And then you're entering, you could probably get another trade out of this now. This is probably going to head back down to here.
Yeah. Yeah, it does look good for another trade.
So
see how quickly we can get this online and make some people some money.
And there's right now, there's a whole bunch of these everywhere. Like the whole market, whilst it looks green at the moment, all of this green it's this buyer recovery. That's after these big drops that we had last week.
Yeah.
Bitcoin's also looking like it's going to have a little bit of a retracement, so it will follow it. So the trade I took earlier on this, there's normally a couple of trades you can take in these bear flags depending on your strategy. A key entry I look for on these flags, whilst this is your ideal entry for a flag right now because it's crawled up here. This bearish engulfing has actually broken the flag structure. It's come back up. It's retested this flag structure, and this rejection now is probably actually what's going to bring you back down again to here. The trade that I took earlier, and the reason why I took the first trade earlier was this up here. So this is, and you'll see this a lot on flags, and it's something really good to look out for. And it's on one of Jason's whiteboard videos. If you should go and watch the whiteboard videos if you haven't, because they are really good. So as I was saying earlier, you've come back up, you've got this nice level here between fibs, between a resistance level, you've got bearish engulfing, you've got a bit of indecision there. It's tried to drop, buyers have picked it back up again. And if you zoom right in here, you can actually see that this is actually a second bearish engulfing. So the body of this bearish engulfing candle, bearish candle on the 4 hour actually engulfs this green one.
Yeah.
And that is a key tell. If you now have a lower high with a second bearish engulfing, that's a really strong indication on the 4 hour that you're going to get a good entry for a reversal down. That's a very key move. You've got bearish engulfing, lower high, bearish engulfing. So that is a perfect kind of entry pattern. So where I got my trade earlier, I saw that on the 4 hour. I think I placed my trade around about here, just after that closed. I got a nice position here, just about met my 1.49. So just about met my 1.5 rule for my stop loss, with my stop loss above this wick. And my target for this trade before this played out was here, because you can clearly see here that this is the next level.
Yeah.
Next level. So what if you depending on your trade style, I could still be in this trade right now, and I could be targeting, technically I could be targeting this, because this is actually the bottom of the bear flag.
Yeah.
Which is 140%, which is great, but 7% on unleveraged on 20x, it's 140%. With the market as it is at the moment, like as I mentioned earlier, Bitcoin kind of could go either way right now. It could retrace, it could pop up and come out of that range. I'm staying in trades for less periods of time. I'm happier jumping in and out, taking my 60-70%, rather than hanging in there and trying to get a nice 140% out here when this could reverse and come back up again if Bitcoin decides to change its mind. So
yeah.
I took profit here. So I took a nice kind of 67-68% there, and you can see it's reversed straight back up again. So if I was still in this trade, I'd be thinking, am I shall I stay in? Shall I stay out? Should I take, 20-30% from back up here? It messes with your mindset. If you either have a target and you stick to it and you get out of that target and you're happy, or if you're targeting this down here, you need to be comfortable with sitting in that trade, potentially going to sleep and leaving that trade open. On the off chance, not the off chance, but if this flag plays out, it's going to take a little bit more time. So you might be in it you might be more of a swing trader. You might be in this trade for a day or two instead of I was in this for less than 4 hours, like 2-3 hours.
Yeah. The other thing too is you can take your position and be happy with your take profit, and then reassess, because it may just be continuing again. And you can use some of that profits and you'll still be up if you're smart enough and you know how to reassess and reset that trade.
Absolutely. And this is a really good example, because, you can see, so this has obviously dropped, it's retraced back up. I would have lost half my profits, if I was still in this trade. You've actually got another entry coming up here now. So we can, the force of this move is this, right? This is a huge bearish engulfing. This kind of really kind of gray looking green candle on the way back up here is just buyer recovery. It's retesting the wedge. If we drop to the hourly, and this is where when I say I look for trades on the 4 hourly and then I look for entries on the 1 hourly, this is why. So the 4 hourly is telling me that this is in the probability that is this going to reverse at least back down to here. 1 hourly is going to help me get some better entries, right? So I was in this trade here. I've exited this trade. We've had a bit of a recovery back up, and I'm looking for the exact same pattern. So on a smaller time frame on the hourly, we know that we've rejected off this wedge. We know that overall we're in a bear trend. We've seen something on the 4 hour that we know we're heading down. And again, we've got bullish engulfing, we've got a spinning top. And if this closes in the next 36 minutes like that, we've now got another bearish engulfing. So it's the exact same as the pattern I was looking for before. If you're happy entering, if it closes there, for example, you either have your stop loss above here, that's 1.66%, a little bit high for me. And then you're targeting the bottom of the flag, which still gives you, that's 5% on leverage. That's 100% trade. You can get that on 20x. But
which is plenty.
Yeah, it's plenty. 5% is fine. But you're also looking for the exact same pattern as before, right? So typically it doesn't just go down, up, down. You see it everywhere, right? It normally has a little a second lower high, which is, if I go back to here, it's the second lower high that's really the key. So you could have entered here, and then at one point this was a bullish engulfing back up here again. So you'd be like, oh crap, I've entered too early. So this second, if you can get entries off the second bearish engulfing, it's a really kind of, it's a really, for me, a really safe confirmation to enter. So what I'd be looking for here on the hourly, if this carries on, if that closes bearish engulfing, I'm like, okay, cool. This thing has got very high probability that it's going to go and complete this bear flag. I'd again be looking for maybe just a little spike up, and that second lower high with another bearish engulfing there, which may take another, 3 or 4 hours to play out on the hourly. If that happens, I probably won't get that. That'll be 1 a.m., 2 a.m. for me, and I'll be in bed. But
I'll get it.
You can get it, yeah. So have a look. Keep an eye on 1 inch. If that closes bearish engulfing, you're looking for another little lower high here, potentially with another little wick to the upside. Normally, you'll get like a tiny little spinning top type candle. And as long as you get a second bearish engulfing that engulfs it, that's a lower high to this. Probability is you coming back down here again, which would be a nice trade.
Yeah, that's cool.
So I've got
And they're everywhere. If you're watching this, those kinds of trades are very, very common. And it's just a matter of getting your vision on that analysis and looking for them. So, um, yeah, is there something you wanted to show us with respect to another direction, a bullish direction, or?
I can do. What I actually found a really good example just before of why it's really important to wait for the second lower high and why a bearish engulfing like this isn't enough on its own. So if we look at YGG, look at what this thing just did and wrecked a load of people. So let's just remove, yeah. So you can see here, kind of similar setup to the one I was just showing on 1 inch. We've had a nice big uptrend. We're probably up about 60, 70% from this bottom. We've had this huge sell-off here. We've had a double bottom here. So that's obviously our kind of major level of support right now. I've done the exact same thing, drawn in my fibs from top to bottom. You can see here, we've come back up. We've got to the 50. It lines up with previous levels of resistance. You've got a bearish engulfing. You've got a double top with this other bearish engulfing. So you'd be thinking, okay, cool. Same thing, right? We'll wait for this to dribble back up again and take a nice short. If you just entered anywhere around here, essentially guessing whilst this candle was open, this thing just absolutely wrecked you. So this whole move is now invalid. Like that's not, you delete that, and you're back. There you go. You're back at now. Now you're looking at a breakout trade long.
Yeah,
because it's broken out and come back down again. So, and it's burnt me a lot over the years while I've kind of been learning this strategy, but it really is important to combine all of those things together, to combine your market structure, to combine your candles, looking for those lower highs with bearish engulfings. Me personally, always on the 4 hour. I'm waiting for the confirmations on the 4 hour, and then I'm dropping to the hourlies to try and get those entries.
yeah, nice.
That's quite a good example there. Like again, now you're not shorting until you're below here because that's clearly a very strong level of support sitting
Yeah,
on an EMA.
yeah, definitely.
Do I
Um,
have a
so Fibonacci comes into play as a rejection zone. That's how you're using that with the flags.
Yeah, pretty much. I mean, a lot of these, typically, if you're looking at a lot of these are quite violent at the moment because Bitcoin's kind of spiking up and down quite a lot. But typically in a bear flag, you normally see, drop and then like it will come back up this way, and your flag will be a lot flatter. So you can kind of draw a channel.
Mm.
You're basically waiting for it to drop out of the channel, retest it, and come
Yeah,
back down to this level. A
yeah,
lot of these are still flags, but they're just a lot steeper right now. And this is because of how Bitcoin's behaving right now.
yeah,
The reason why these are steep like that is because Bitcoin's doing this. See this big, this is
yeah.
just
It's got to
dragging
move
everything
on.
up. As soon as Bitcoin did that, it's dragged everything right back up again with it. So this is still bearish market structure. But you're waiting for your confirmations. Otherwise, if you start guessing and entering too early, then you end up looking like YGG, whatever that did to people. So it's another one.
Yeah,
OP is a really good one. So the other way you can trade these, I like to trade them as well when you're looking at flags. We draw our uptrend. Let me just zoom in on this so you can see it. So another classic way to trade flags, or good entry points to look for. If I get rid of the fibs, you're normally waiting for 3 touches on these trend lines. So say for example, this is your flagpole, and then there's your pennant. Actually, that's terrible. I'll just draw a line. Way better. All right. So can you see it?
yeah,
So you've got 1, 2, 3.
yeah,
And for a really kind of solid confirmation, and I kind of trade them a little bit more this way around when they're going long for bull flags. It's just market structure, right? So if I delete that line there, that's your current high or low. So even though we know we've broken trend, we know we've got new market structure, we know we may be reversing, right now, that's your high or low. So high low, high low, high low. If you want to trade that short and wait for this flag to break, it's the exact same thing. You're waiting to break out the flag. It may stop there. It may come back up to retest the pennant, but that is what you're waiting for because that is a lower low to that.
Mm.
It's market structure combined with breaking out the flag. And the powerful thing when you'll start seeing these, if you start trading flags a lot, is it's normally 3 touches. 1, 2, 3. 3 touches along this line. Same with the bull flag. You'll see 3, and I'll see if I can find one for you.
Just while
Here's a
you're
good.
just while you're looking, the market structure is something that a lot of new traders just overlook. I think it's like, okay, it's looking like it's going to do that. Whereas market structure is critical. It's critical to every single trade you take, no matter whether you're trading flags or breakouts, retests, support, resistance, trendline, Fibonacci. Market structure is critical. If you are watching this and you are not in an education program, you need to jump on board, make contact with us, Michael, myself. But you also are looking at the need to actually implement it and understand how it looks. It could be a macro or a micro, so a bigger picture or a smaller picture. Market structure is critical, whatever it may be. It's a matter of you understanding what it's doing to see whether the lines are going in a certain direction, and you just need to be familiar with that. So if you're not familiar with market structure, you may as well not move on until you are, because that's the king.
Yeah, absolutely. Market structure is king. Here's one I was looking at before on DYDX, more of a kind of a bullish move at the moment. Doesn't really meet all of my rules, so it's something that I've just been watching and I haven't really entered. But you can see here in the kind of bullish structure, you've got like, you've got your a strong move here from the buyers. You've then got this wedge coming down here, or this kind of like falling channel.
Mm-hmm.
And this is what we're looking for, right? This could be a good trade. Needs a little bit more, a couple more confirmations for me.
Would you call that a bull flag?
I would call it a bull flag. The only thing I don't really like is that it's a huge push at the start. So when these moves are quite violent, it can be quite tricky to get them.
Mm-hmm.
And I normally like just to see more of there's one touch on the top of the flag. There's a second touch on the top of the flag. And you can see here with these wicks, that's the third touch on the top of the flag, but it's not. I'd normally like to see kind of a third touch, it come back down again a bit and then burst out.
Yeah.
It's just burst out here straight away, which is obviously it's quite bullish from this initial push. So, I mean, still, it's respecting a lot of the rules of a flag there. So we've got a nice big flagpole. We've had this kind of retracement back down again. It's broke out of this flag. It's now created new market structure. This was the last higher low,
Mm-hmm.
lower high, sorry, lower high market structure again. It's come back out of this and it's come back down. It's now retesting this level of support. You can see it's quite a strong level of support here. We've held once. We're above all 3 EMAs. What I'm looking for here, and this is where it's the opposite to trading bear flags, is you're looking for this to come back down to support again, a nice hammer, something with a wick to the downside, which again shows that sellers have tried to push it down and buyers are now saying, no, this is a fair level of support. Anything with a hammer followed by bullish engulfing, that's momentum. That means buyers are back. And so you'd be looking to take a trade somewhere around there, depending on where your stop loss is at. First target is here. That's huge. That's 12% unleveraged, your first target there. So it'll be a hard one to get because normally when they've mooned quite violently like this, you've really got to be on the screens at the right time to try and catch the right candles here. But yeah, DYDX right now, if Bitcoin doesn't completely fall to the floor again, is looking very bullish. That's kind of a classic bull flag to me. And then, your first target's there. If you're feeling really bullish, then you might, depending on where you might draw something from there and start measuring flag poles and stuff like that.
And the reason that position size that you've drawn there, and you can support or deny, my opinion, would be that could come back and bounce off that support line and just retest that area. That where Mike's drawn the top of the green box for a long, that's the safe zone to target, because it just may come back up there and try again for the third time and break out of that area. If it does, then it does. But Mike's taken his profits in the process of that happening. And if it doesn't, then maybe there's an opportunity to take some profit along the way. Or if it falls through, then he doesn't enter the trade and life goes on. So when you're setting your positions, make sure that you're not being too greedy, and just considering why would it go back there? What's the narrative of the story, kind of thing, you know?
And to be honest, that's quite a greedy trade, right? That's 120% if you're trading 10x, 240% if you're trading 20x, which, as we can see in the last couple of weeks, these coins can do this easily. There's a lot of people that are making some really good percentages at the moment, but if you wanted to be a little bit more conservative and drop that down to the hourly, which gives you a little bit more detail, there's other targets that you can set within here that if you don't want to gun for this on its own. So we can see right now we've actually, within this move, we've dropped, and this is why I'm waiting for it to come back down here again, because what does this look like? It's a horseshoe, right? It happens on all these time frames. Drop, you can have this. Ideally, you'll come back down again, and this second touch on this support is typically what you'll see to confirm it as support, and that's where we're looking for wicks to the downside, evidence of buyer support, bullish engulfing, nice candles like that we're looking for on the hourly. And if you could set your first take profit, depending on where your stop loss is at and your risk to reward ratio, you can set it there. As you can see here that obviously right now we're rejecting at this level. And so even that, if we go back to our risk to reward tool, and say we had a stop loss in and around, anywhere under 3% stop loss, that's still a 2-to-1 trade. It's a 5% trade, so 50% on 10x or 100% on 20x. So you don't have to just it's still a great trade. So you don't have to gun for these big highs.
Yeah.
You can always set a take profit there or set an alarm there, depending on whatever your trading strategy is. I'm more than happy with 100% on any trade. So it doesn't have to move massive amounts for you to make some okay money.
And if you're targeting big profits, then you've got to be fairly confident that you're going to actually make it. And you're not going to get that daily. Whereas if you're targeting smaller profits, then you can just slowly, it's like a bank account. Like if you put when you first started working at 15 years old or whatever, you put $25 a week into a managed fund, you'd have a shitload of money down the track. Whereas if you go, righto, I'm going to clump that and put that in, and then you don't do it, and then you miss a trade or you lose a little bit, you're not going to have as much. So if you got these consistent smaller wins going on, that's good advice.
Yeah, absolutely. And crypto is crypto, right? So when you say consistent small wins, 50% wins is not a small win, in any market in the world. So
No.
well, I think it's always kind of good just to reset sometimes. And it's great. You can kind of get triple figure trades and a couple of 100% out of this thing, that's obviously why we're learning to do it. But anywhere over 20%, 20% is a great trade. 20% from whatever you've put into a trade, anything really, 5%, 10%. Any profit is good profit. So
absolutely,
and again, it depends on your trading style. It depends on the leverage that you're using. It depends how comfortable you are sitting in trades for certain periods of time. You might get lucky and hit a triple figure trade in a day. It's pretty rare normally. I mean what the 1 inch trade I hit earlier, like I say, I could still be in that right now, and I'd still be kind of at half of what I took earlier. It might take this another couple of days, and I could have got 140% out of it. But I've also taken 70% already, and I can now go on and potentially, look at fresh trades tomorrow and compound some of the money that I've already earned. So again, it's just based on your style.
Mate, that's magic. And another how I trade, obviously with Mike Edward being flags, that's critical information, goes along the ones that we've already done on this channel. Absolutely fantastic, my friend, and I do appreciate you sharing your knowledge. I'm actually going to get you back because I know that you've got a lot of tools in your belt. So totally appreciate it. And to the viewers out there, feel free to like and subscribe, and there'll be more, but both of the How I Trade series, but also from Mike Edward. Thank you so much, my friend.
Good stuff, mate. Thanks for having me on. Appreciate it.
Cheers.